Hey guys, Kill Stokes here. Welcome back to the Trading Edge video, your weekly look around the markets. Thank you as always for joining me. Last week was an extremely busy week in the markets with the handful of news events that we had, flood of news events that we had. And honestly, it started off a little bit rough for me, but luckily I was able to end the week on a very positive note, hitting on a handful of winners. So I'm excited about the week ahead to see if we can keep that momentum going. Speaking of keeping the momentum going, you might have heard Jason Greystone and myself just launched a brand new podcast called the Trader Coffee Break. It's the same show that we do weekly here on YouTube. Now it's available on podcast apps for you. We have a cool little challenge as well. If we can get the podcast to be ranked number one on Apple Podcasts, I think we're 14th last time I checked, which is pretty cool because it's only been out for 2 days, then we're going to give a free Tier 1 trading membership away. But here's what you have to do to be in the running for that. You have to go on Apple Podcasts, you have to leave a rating, leave a review, and then what we're going to do is we're going to find your name, we're going to put them into a randomizer, and we will pick one lucky person. So if you guys can do that and help us reach number one, you may have a chance at winning a free Tier 1 trading membership. Now, I've got a lot to look at this week. We're going to start here on Pound Aussie and do some top-down analysis. As you can see, Pound Aussie has been in a state of consolidation. However, it's been in a state of consolidation above a key level of structure. So if you guys remember this little area right here, which we thought at the time would be the left shoulder of a potential head and shoulders pattern, we have cleared that level. And then we started our own little consolidation. We not only have consolidation here on the daily time frame, but if you go down to the 4 hour, you're going to see even more consolidation. If we just look at the ebbs and flows of price action travels down. We kind of find a bottom down here. We break out of that bottom, retrace. Looks like we're heading into a bullish trend. We can't get past structure looking left. We retrace off of that, and then boom, we finally do get past structure looking left, and then right away, we go ahead and violate this level right here, and then we double bottom down here, then we break and close above here, right? This is a good example of consolidation and something that we would call unstructured consolidation. There's a structured consolidation, which is rather predictable. There's an unstructured consolidation where it's like, I don't know what the heck the market is doing. And if you're a newer trader and recognizing that, it could be one of two things. One, it could be working on your ability to read the ebbs and flows of the market. In my experience of working with new traders especially, this is probably the most difficult hurdle to get through, mainly because there's no shortcut. It just takes time in the market and reps and taking experience, but everyone wants to learn it fast. Or it could just be accepting the fact that I don't know what the market is doing and I should not do anything right now. Rather, I should wait until the market shows its hand. And once it does that, then I can line up my next trading opportunity. And that's exactly what we're going to see as we go down to the lower time frame. So heading down to the hourly, and I'll erase a little bit of my junk right here and then redraw it right on in typical Keel fashion. Again, we came down, we had a nice little double bottom right here, and then we broke the peak of that double bottom right here, confirming that bullish action. Now, normally in this situation, I would set up for a 26.18 or say, hey guys, we're looking for a continuation higher. However, we have not violated the most recent level of structure, which is this little guy right here. Again, if you picture price action coming down here, we have this little retracement before heading down. We have not broken and closed above that level. So I love the relief that we're getting at the end of the week. And again, it was a busy news event filled week, hence kind of all the weird movement in the market. But I can't look for a bullish trade yet, right? Normally I would say wait for a pullback into this zone right here, then look to buy it up. But I need that fresh break first. So if we can break this level, right? So we're kind of 2 steps ahead. If we get this pullback, if we then violate this level, then I'll be looking for a continuation higher. And if we continuate higher, yes, that's a word that I made up in 15, 16, 17, 18 years of trading. I've earned the right to make up my own words. If we continuate higher, then I would project that we would continue to this level right here. The low, most conservative part being about 194.80s, and then we have that psychological number 195 even in the middle as well. I haven't done any Fibonacci's or anything like that. I guess I can do that right now. Let's do a Fibonacci retracement from swing high to swing low. No Fibonacci's in that area. Let's do a Fibonacci extension from swing low to swing high. I'm guessing 1618, if I had to guess correctly. 1618, right in that level. Let's just bring in some volume just because as well. Yep, you can see the nice void right here. If you guys are new, volume is synonymous with interest. Where there is interest in the market has trouble breaking through. It's kind of like a traffic jam when everyone's rushing to get to the same spot. It's slow moving traffic, lots of beeping, you can't really navigate. The void is where there's not a lot of interest. When you're someone like me who's up 5 o'clock in the morning and is on the road when no one else is alive yet, you can get places pretty quickly because there's no traffic. So think of price action as being the same way. When you get to these high volume levels, these high interest levels, it tends to slow down. The market has to think about what it wants to do because there's actions from buyers and sellers on both sides kind of clouding it. When you get these void levels, it's pretty clear sailing. And that's why I said it makes for a perfect lesson. Look at that, man. Imagine if I did this analysis before I spoke to you guys, right? That's why I said earlier, if we can break this pink line right here, then our next location is up there. Man, he's good. Next up, we're going to go over to the pound Aussie's cousin, the pound New Zealand. And this is a follow-up. As you can see, my notes are still in the chart from our live room on Thursday. This is a follow-up on a potential classic charting pattern formation that we've been eyeing up for a while. This is going to be called a head and shoulders pattern. You guys should be familiar with this by now if you're a frequent follower of the video, but I know a lot of you guys are new. Welcome, by the way. Make sure you subscribe, that way you don't miss my latest uploads. I did 3 new videos this week, not counting Trading Coach podcast episodes, so make sure you catch up on those. But directional move higher, retracement left shoulder down the neckline, failed or limited extension is going to be our head. Our deep retracement, is going to be our second part of our neckline, our right neck, I guess you can say. And then we're typically looking for a symmetrical move back up to form our right shoulder. And when I say symmetrical, meaning we're looking for it to kind of complete in the same area as the left shoulder. It doesn't have to, but when the market's moving harmonically, and typically when it's moving harmonically, it's a little bit easier to make predictions. That's what you see happen. So you can see we're really early on in the game right now, but I want to bring this to your attention that we have the right shoulder of a head and shoulders pattern forming. Once again, magic pink line, right? I'm going to shift this down a little bit. If we can break this line, if we can violate this line to the downside, that would confirm the head and shoulders pattern. And then the prediction, as you can see on your charts, would be down to either the monkey zone or the elephant zone. It's an inside joke from our live trading room, so don't take it seriously. Don't go searching a monkey pattern in Forex or something like that. It's just kind of the fun that we have during our trading day. But essentially think of the elephant zone as being kind of the more pinpointed area that I would expect price to go to, and the monkey zone being the wider area. Now we're back on the DAX. So we got another continuation set up here, right? We're making all-time highs. We've been in this continuation pattern. You can see price action came from this area where we kind of based off, had a little bit of a think about what price wanted to do. And then boom, price said, hey, you know what? I'm deciding to break out and go higher, right? And we got our breakout, and now we're looking for our relief here. So the question is, how do we play this? Where is this thing likely to give us relief at? Because our initial zone is pretty large, and it's really not helpful to be like, hey guys, just buy somewhere in this zone. So let's go down to our hourly chart and see if we can pinpoint where a good buying opportunity would be at. We have a few things happening for us, right? One, we have a complex pullback, right? Had a question about Elliott waves. If you guys didn't see it, we have a free workshop that we're hosting on March 25th. It's going to be a week-long workshop. And we've been asking on our socials, hey guys, tell us what you want to learn about in the workshop. Because as you guys know, if you've ever been to one before, we gear these workshops towards what you guys want to learn. So that offer still stands, right? If you have something that you want to learn about, type it in the comment section below this video. You can DM me if you follow me on socials, at Akil Stokes RTM. But Elliott waves was one that came in. We'll see how popular that gets. But this has a little bit of Elliott wave action in it. Not the full wave setup or count, but the fact that at the end of an extension, or the end of the third extension, right, fifth wave, comes a pullback. And it's typically a pullback of the complex fashion, meaning it's not just a straight kind of move up to down. It's a little complex pullback where it's a multiple leg pullback, and that's what we have right here. In fact, if I take this right here and I measure it and clone it, this is, an equal length move from here to here. I can also take my Fibonacci retracement from our swing low to swing high. Let's see if there's anything in here. Again, I do these for the first time with you guys. 50% retracement between a 50% and a 618. This is a nice sweet spot right here. And then let's take our Fibonacci extension from swing high to swing low right there and back up. Look at that. We have a 127 and a 1618. So we have a 127 and a 50% lining up right here. We have a 1618 and a 618, the two golden means if you're into Fibonacci stuff. And if you aren't into Fibonacci stuff and you want to learn, I warn you, you're embarking on a very, very deep rabbit hole. One that will suck you in and spit you out in a whole different place. It's like me when I study like space and I somehow end up on like some quantum physics website trying to understand quantum physics, fully understanding that the human mind isn't capable of understanding quantum physics. Fibonacci is the same way. You start looking at like rabbit reproduction videos. My wife caught me one time and she's like, "What are you into?" I said, "Babe, trust me, I'm all down for trying new things, but not this. This is strictly trading related." I was going to finish that story by saying I went and got like a bunny mask and something like that. But when you say stuff like that on the internet, it kind of, I don't know, all sorts of things are going to pop up now, and my algorithm's going to be all messed up. Anyway, I joke, I kid. If you're in that thing, I don't judge. But Fibonacci's are very, very interesting. Just be careful because they do get you down a really dark path. Let's get back to business. Anyway, AB equals CD pattern. Fibonacci extension zones, 127 and 50% lining up together, 1618 and 618 lining up together. This is a nice sweet spot. I forgot structure. Look left, structure leaves clues, my normal thing. This is a really good sweet spot, I think, for where to look for that potential end of this pullback and that next opportunity to trade it higher on DAX here. I'm distracted. I'll see you next week. Take care.